If you go through estate planning with a financial advisor or look up information on the internet about estate planning or even listen to the news, you've probably heard a lot about estate tax and inheritance tax. Hi, I'm John Alper, and I'm an estate planning asset protection attorney in Orlando, Florida, and I've been practicing and advising people on estate planning and tax for over 30 years. Here are a few things you should know about the estate tax. First, estate tax is much different than income tax. Estate tax is a tax imposed on the value of everything you own or every interest you have, which is transferred during your lifetime or after your death. Your tax liability is based on what is referred to as the gross estate. Gross estate means all of those assets and all of those interests that potentially could be subject to tax. So, things that are not taxable for income tax, like retirement accounts, for example, or life insurance, cash value, various assets that may escape income tax, are still part of that bucket of all your stuff that could be subject to estate tax. Secondly, each individual who's a U.S. citizen has an exemption or a free pass to transfer a certain amount of property before having the gross estate subject to tax. This is a political issue, and as administrations come and go in Washington, the level of the credit or free pass coupon for transfers has changed. Many years ago, the exemption or coupon was only about $600,000. Today, as we speak, or as I record, the exemption is over $11 million per person, which means that each of us can transfer estate tax-free up to $11 million of assets to their intended heirs. Secondly, that a husband and wife can combine their estate tax credits. So a couple together, married, U.S. citizens, can convey over $22 million of assets to their heirs. However, there's talk politically, as there always is, that this credit could be changed and could come down to lower levels in the future. So you need to keep abreast as you go through life of what the estate tax credit is going to apply, or how much you can transfer tax-free to your heirs at anticipated time of death. Next, you also need to understand that the amount that you can transfer and the amount of your credit applies throughout your lifetime. It's not just a death tax. What this means is that any part of your gross estate transferred either during your life as gifts or after your tax counts as a transfer potentially subject to estate tax. Obviously, as people know, that each year you can make tax-free gifts of now up to about $15,000, and those gifts do not count against your transfers. But any transfer above that gift credit will, at your death, be calculated, and the total transfers, either during life or during death, if they are above the credit limit, will be taxed subject to estate tax. As you can see, estate tax is a complicated area, and there are many, many more rules and regulations that apply, and there are many tools that you can use to avoid or reduce your gross estate and reduce transfer tax liability. If you feel that you may have a gross estate that could be taxable at your death, please give me a call. I can help you show you planning alternatives and tax-saving alternatives that could save substantial amounts of money for your heirs. Thank you for watching.